the month of September, now at 141. So, it's a 40% gain in probably 40 days or less. Yesterday, DLF announced the details of the conversion of the preference shares, and the promoters said that they would be pumping back the money. Adhidev Chattopadhyay, the real estate analyst at Elara Capital, joins us now. Adhidev, good morning. Thanks a lot for joining us. What were your key takeaways from DLF's board meeting announcements yesterday?
Yeah, good morning. Yeah, then the details announced by the company, it is fairly on line with what was expected by the market and what was communicated earlier also. So only clarity which has come is now that DLF would not be selling any stake right now, but it's only the promoters who will be selling their 40% in the company. Considering company's current position, as you are well aware, the NCR, the residential market is not doing very well. Company has been going slow on launches. However, at the same time, the office market across the country and especially in Taiwan cities has been doing well. So you're also seeing an uptick in rentals, and DLF's rental business, we're expecting around 2,400 crores of rental this year, and with the Noida Mall also starting operations next year, it's expecting the company to reach around 3,000 crores of rental income by FY18. So that is obviously the most valuable asset in the company's portfolio, and this is would be the right time to monetize the asset also.
Okay, Adhidev, hi, good morning. So 3,000 crores. Yeah, sure. Go ahead, finish your answer.
Yeah, and if one looks at what are the positives for the company, obviously yes, there post whenever the transaction happens, there would be some the promoter structure would be simplified in the subsidiary, that is the rental business, because currently promoters effectively hold 85% in that SPV, but post shares that stake sale, it will come down to 45%. Yeah, and also as well known, the proceeds of the issue can then be used to infuse money back into DLF. So however, when this will be done and whether they would sorry?
No, I just wanted to know whether for you the top point would be that the company becomes more debt free, or at least the debt load will get reduced.
Yeah. So if you see in the broadly, the company has got around 21,000 crores of net debt, or 2/3 is attributable to the rental business. Now, what is yet not clear is the investor who would come in at the rental business. Would the debt also be part of the deal, or it is just an equity stake sale? So so we still don't know what is the value. So, but still assuming, let's say 3,000 crores as a rental income and giving an enterprise value of 30,000 crores to the overall rental business. And if we subtract the entire debt, that is 14,000 crores on that business, so you're left with an equity value of 16,000 crores. And promoters 40% in that would be worth around roughly around 6,500 crores.
Okay.
Over there. So that is the sort of money we are looking at possibly the promoters could raise. But there is still to be some clarity on how much taxation they would have to pay, because as you know, the face value is 1,600 crores for these instruments. So what is the taxation liability? That also, I think the company would look at the tax structure.
All right, but since there are some sincere efforts by the management to deleverage the balance sheet for the last many weeks and months now, do you expect more upside on the stock? Because the stock has already gone from 90 to 140 in a very short span of time.
Yeah, so I attribute two things to this. One is obviously the recent cut in the interest rates taken by the Reserve Bank of India. That has had a rub-off effect. And this being a large cap liquid stock in the sector, it has obviously percolated down and reflected in the stock price. Also, the announcement of whatever the announcement they made yesterday, this has been in the news for quite some time. So I think stock has already reacted to an extent on the expected announcement of this deal. However, now the stake sale would happen probably over the next 6 months in the rental business. Then the fund instrument would come into the company probably next year. But how and when and what value the company would like to dilute, that is still not known. So obviously, over a longer term, if you take a, let's say 18 to 24 months view, yes, overall company should be in a better shape going ahead. But however, subject to all these, the multiple legs of all these transactions being completed.
Okay. All right. Thanks a lot, Adhidev, for joining us with your take on DLF. Well.